So welcome back to the second episode of the webinar series on crypto. So to my left, I've got Lee from Independent Reserve and Dan from Cosmos Asset Management. So welcome back, gents.
Thank you for having us.
Great to be back. You're looking well after your trip to the US since we last spoke?
Yes, Super Bowl week, so I can't complain. That was pretty phenomenal. So guys, it was a pretty interesting first episode last week. I thought what we do is address some of the concerns that came out of that, some of the highlights that have basically come out subsequent to that first episode. But I guess the overarching, I wouldn't say criticism, but concern from some of the advisors that's come back, and you'll see it here on the screen at the moment, is I guess there is a sentiment around crypto as a speculative tool still on APLs for advisors and licensee. You'll see this quote from one of the advisors is, just know APLs hold investments. Crypto is speculating. There is a fundamental difference. Now, Lee and Dan, I'm going to throw you over in terms of addressing that question. So Lee, how would you take that on from your perspective?
Yeah, look, we get this kind of attitude a lot. I think within the crypto industry, a lot of these concerns that probably are now in the mainstream have already been addressed and we've kind of moved on. So we need to go back a few steps and address these things because we do have answers for them. On the first point, I think with the regulation side, regulation is certainly coming. I think the Minister Hume and Bragg have made that abundantly clear that we really want to have policy and framework and minimum standards in place, which is something certainly Independent Reserve and the industry is supportive of. I think realistically we're probably 18 months away from that, but just having regulation isn't necessarily going to be a magic bullet where everyone just goes, okay, this thing's legit now, right? But I think we can, I guess the key point with crypto and people who are still familiar with it is they might look at it in point in time, look at the volatility and say, oh, well, it's not everything it's cracked up to be, it can only be used for speculation. But we need to certainly look to where it's going and what the promise of these technologies can be used for. And there's probably no better, I guess, you don't have to take my word for it. We can look at the Black Rocks of the world, we can look at the Goldman Sachses of the world that are now entering the crypto space on a number of levels. Now, they are powerhouses in the traditional finance world, and they've definitely done their data and research, or their analytics and research on it, and they've come to the conclusion, this is here, it's real, it's investable. It really is going to come down to individual education by advisors to really engage and just look at the underlying technology and learn why there's such an amount of hype around the whole thing.
Yeah, look, and to add to that, I mean, it's look, with any new technology, you're always going to have those that are sort of, embrace it right on, and then you're going to have sort of a segment of the market that are still trying to learn about what is this technology, whether that's an investment technology or just simple like the internet technology, right? We saw that in the internet days, and then we're now seeing this with this, cryptocurrency technology, which essentially is going to be the future of how we transact digitally. We've moved into sort of conversational or emailing, etc. space with an internet, and now we're sort of transitioning to a technology that allows us to transact from the traditional way we know how, which is fiat. And there's definitely concerns around, what is this thing? But I think the key thing here is you have to, if I'm sitting in an advisor's seat, one of the things that I need to sort of kind of think about here is what are clients asking for? And how can I prepare myself to ensure that I'm well equipped to answer these questions for my clients. So the BlackRocks and the Goldmans and these institutional investors that are entering the space, they're not entering the space on their own accord, right? Their clients have asked for this exposure, and they've taken the time to do their research to figure out what is the best way to help address these questions that are coming in from my institutional clients. One of the things at Cosmos that we've looked at, from the technology and from a financial product perspective is, this asset class comes with volatility. So how can I think about it in the context of portfolio construction? If a client wants exposure, how do I think about it, right? And our research shows that a small amount of allocation in a traditional 60-40 portfolio can deliver tremendous outsized return. So for instance, a simple 5% allocation in a traditional 60-40 portfolio delivers approximately 35% of the overall returns. Yeah. So Again, I think, and I don't want to be flippant here with sort of, people not wanting to get on board. I think what we all need to do is take a step back and have a think about what's happening in the asset class. What are people talking about? What clients are adopting this? Like if I'm an advisor, right, if you look at the studies of the demographic of investors invested in this asset class, it's the millennials, right? There's a huge amount of millennials. And if you think about the next generation of wealth inheritors, that's the segment. And so I need to prepare myself as a business to ensure that I'm well equipped and well educated to, provide well-informed information for my clients when they come to me and ask for it. So I don't think we should just park it on the side and just say, oh, it's a speculative asset class. I think we're past that stage. It's an emergent asset class. It's a volatile asset class, and as we get more adoption, that volatility will subside.
Interesting remark that was made recently to me around the speculation front here, Dan. I think, I see this asset class as a little bit of a hedge as well in terms of inflation, rising inflation at the moment. Someone made mention of the fact, how is it different to derivatives and putting a put option over your portfolio to protect the entire portfolio? I guess crypto and Bitcoin and that asset class in itself, if you look at it from that perspective, potentially has that role as well to play, doesn't it? Is a hedge to portfolios.
Yeah, look, absolutely. Look, the design of specifically to Bitcoin, with the limited amount of Bitcoin that's going to be available, right? It is seen as a commodity and storage of value. And some investors are looking at it that way. Some institutional investors are putting on treasury balance sheets specifically for that. But again, let's just take a step back and let's have a look at our traditional asset exposures for storage of value, right? You have almost 120 trillion in fixed interest globally, with the majority of them being sort of treasuries that have been used as protection instruments or defensive asset instruments. Now you have quite a bit of assets in these, when I say assets, dollars and money in these asset classes that are yielding negative returns for investors. Now let's take a step back and let's have a look at the traditional gold as a storage of value, right? Again, you have about 11 trillion in assets in this asset class, and I guess up until recently, it actually has not kept up with inflation. Whereas you have this Bitcoin asset class that has had this outstanding return that has kept pace and more towards inflation. So, the astute investor is saying, I can put a small piece of this asset class in my inflationary portfolio for protection, right? And again, as we advance and as the last Bitcoin is mined down the road, right, you would have this commodity that would be used as a pure hedge to inflation. Right? So I think, from my view, I think it's important that each investor just do their own homework, do the research. There's a lot of information out there, but surely this asset class is being seen as a storage of value, specifically Bitcoin, and some investors are already sort of allocating assets in the space as such.
Before I close off this direct question, because I think it's the major concern amongst advisors and licensees, is around that high-level comment, speculative asset class, gambling, la-di-da-di-da. I'm going to throw over to you. You mentioned research and analytics, Lee, in terms of making sure you understand. You've got Warren Buffett now, who was a naysayer, 5 years ago, and now he's investing indirectly into this asset class. Last time we talked about Jamie Dimon and the banks and Goldman's and BlackRock, which was great. So, but it's more than just sort of investing in the asset. There's a bunch of businesses that have spawned off the back of this entire sort of ecosystem. Yeah,
exactly. Probably the most obvious example is what's going on within the Ethereum network. So certainly with the price volatility, anytime you've got assets that's volatile, you're going to have people who are trading it to try and make a quick buck. But that kind of glosses over the fact that within the Ethereum ecosystem, there's literally tens of thousands of developers who are there purely for the tech to build businesses. They're there, like I said, to build businesses. They're not there just for the speculation. And we also have to remember that Ethereum, for example, Bitcoin's been around for 13 odd years, but Ethereum's only been around for since 2015. It's still very new. So within that short 7 years, we've now got a huge ecosystem, millions of dollars and billions of dollars of investment, tens of thousands of developers coming into this space within a short period of time. So I think it'd be really short-sighted to say, hey, there's nothing happening here, it's just for speculation. We're still very, very early, and over the next 10 years, there's a real opportunity for those who take the time and effort to learn it to really, distinguish themselves as people who understand this new technology. And like we said before, we're seeing bigger and bigger institutions come out and say, we've done the research, we've done the math, it's bankable, let's do it. Which
actually goes on really well to my next question around advisors licensees. The big theme that came out of our recent research was around ESG. Exposure to ESG, that's basically where super funds are investing now and all those sorts of things. Obviously, there's been a criticism around mining, around how ESG compliant it is. Is it environmentally? We had Elon Musk that came out last year around you couldn't actually now trade, buy Tesla cars with it because of the fact that he was concerned around the environmental aspect of it. I think he quickly changed his tune, flipped it on his head after sort of some uproar from the community. What's your comment around the ESG side? I know you're both quite adamant around this sort of stance.
I'm just going to touch on the Elon Musk thing because there's just that recent Will Smith and slap, and you've got to ask yourself, did Elon Musk know what he's doing? Like, was it staged or not? Right, and we're not sure if the Will Smith incident was staged or not. We're still trying to figure that out. But anyway,
come on.
In any event, look, one of the key things that you sort of have to consider is understanding the economics of the Bitcoin miner, right? Bitcoin mining is a feature, not a bug, when it comes to the energy usage, right? They require the energy to secure the network. And so if, as a business, if you're running a business to be profitable, what are you going to look after as far as your operating cost? You're going to try and sort out low cost operating cost in running a business. And so what that means is that miners actually sort stranded energy in mining Bitcoin, right? So what does that mean? Stranded energy is basically renewables. Energy that has not been, it's being developed, but it's not actually being tapped into because it doesn't have the infrastructure to be on the current grid system.
Yeah, right.
Right. So, and if you think about, so that's the E part, right? The environmental, right? The Bitcoin miners today, the stats are, 76% of miners use renewable energy. I think that number has probably gone up since the last report.
And I guess that's the argument, isn't it? The more mining that goes into the industry, the fact that it progresses renewable energy or the investment in renewable energy more and more. So, by virtue of miners being there, you've got a virtuous circle in terms of renewable energy becoming more mainstream.
Yeah. And then on the social part of it, so we've covered off the sort of that myth. Let's just say like we've covered it. Let's put it aside. Miners will sort stranded energy, which is low cost energy, so that they're profitable in running their business. So that's the E front. On the social aspect, you have to then ask the question: what does Bitcoin mining and Bitcoin? What's the impact on the social side of things, right? What Bitcoin is doing globally is helping to bank the unbanked economies.
Yep.
Right. So that's from a social aspect. And if we bring that to sort of recent developments, and Lee will probably speak to this because he has a real example from one of his colleagues in their business. But the recent developments with the war in Ukraine and Russia, you have to think about how sort of the SWIFT system works when transacting or sending money from one country to the next country, and the various banks that it touches, right? There's a key reason that Ukraine started to sort of build a digital currency platform and swiftly switch to Bitcoin as a tender to allow funding for them to support themselves against this, I would say, aggressor coming in trying to take over their country.
Yep.
So if I'm Ukrainian...
So the headlines of Russian oligarchs getting their money out of Russia is really just that. It's a headline grabbing, which obviously puts the pressure on the Bitcoin community and crypto, that lasting element of, oh no, another thing around Bitcoin being used for nefarious reasons.
Let's talk about the context of dollars in Bitcoin, let's say like around $1 trillion or so, and the dollars would be oligarchs. Like, there's some shadiness happening there. Like, and if, I would say global governments and regulators wanted to take action, they should have done that way before this instance, right? Yeah. But who does that hurt? Like, if you put a sanction,
we're not going to get into it.
Yeah, exactly. Yeah, exactly.
Now,
let's not. Yeah. Like, but who does that impact if you all of a sudden, close down the wallets of, the Russians, the local Russians that, have not, some that actually don't want this war, let's just say, or even the local Ukrainians that can't get access to capital, or families that are abroad that are trying to send them capital. And again, like Lee, please share this story, because I think that's really important, because
I
learned about it and I was just like, that should sum it up.
Look, it's really timely because Janet Yellen actually just came out recently, and even though she's kind of well known for being a little bit crypto skeptic, she did say, look, there's a real use case in crypto to disrupt the payment system. The story goes that we have a team of developers who work out of Kyrgyzstan. So there's no sanctions placed on Kyrgyzstan. We've got nothing. There's no reason why we couldn't send them their paychecks at the end of each month. Right now, the only way to do it is really through the SWIFT system. Anyone who's used the SWIFT system knows that it's slow, it's costly. You kind of put your money in there and hope, say your prayers and hope it gets there within the time. Because of the sanctions on Russia, we sent the money to our developers in Kyrgyzstan, their monthly wages, and because of the sanctions, it got caught somewhere. We don't know where it went, but it got caught through a Russian bank. So the money just disappeared. We don't know where it's gone. It's completely opaque. We just don't know. Yeah. So as a result, we kind of, we're out the monthly wages, they're out their monthly wages because of something that's happening in a third jurisdiction that's got nothing to do with them. You just simply wouldn't have that issue with crypto because it would go directly to them. So I mean, again, it's a real world use case and probably the best major use case right now that people can easily understand.
Yeah, it's so interesting, that sort of what's being caught up in this whole saga, and where does crypto sort of play a role in world economics?
And it brings us to the third point on the G and the governance piece of it, right? It's decentralized, right? Crypto is decentralized. And what mining does is it ensures the security of that network, right? So again, when we talk about Bitcoin mining not being ESG friendly, just quickly to resum, right? On the E, right, it is using stranded energy because they're incentivized to do so to be profitable, to be a profitable business. 1, 2, on the social aspect of it, they're actually helping economies or unbanked economies get access to capital. And last but not least, on the governance side, right, it's decentralized.
So, ticking the ESG box, assume we're ticking the ESG box right now. I know some people will still have questions around that, and please do, ask us questions throughout the course of the webinar or post this webinar. What is it like? There's been some significant sort of talk more recently. We had Blockchain Week last week. Governments coming out recently. So there has been some advancements since our last discussion, hasn't there, Lee, in terms of progress in this whole market, which is only promising for those that do want that exposure, or advisors and licensees that are sort of thinking about it.
Absolutely. A lot of laggards to the space will say, oh, well, I'm not going to invest in crypto because, governments will just come out and ban it and, it'll be regulated out of existence and all this type of thing. And I guess it's always been a bit of a mystery until governments actually started coming out and putting forward their official positions. And what we're actually seeing is through the Biden executive order saying, no, actually, this is a great opportunity for us to lead, America to lead this space. So let's put some frameworks and regulations in place to encourage and incentivize activity in the space because they want to be the leader in the space, which is a great endorsement. Australia is absolutely leading the charge, and I think we have the chance to really lead this space and again attract capital, technology, jobs. But also, as I mentioned before, Janet Yellen, who is a known sort of skeptic, came out and said, actually, you know what? There's some real use cases for this, particularly in the payment space. And the other probably big announcement that sort of happened for those not super familiar with it is the EU had a vote. The EU Parliament had a vote. And effectively it was legislation saying because of the concerns around Bitcoin's power use, will we effectively ban the mechanism by which Bitcoin bans? And that vote was voted down. And the sentiment that came out of that was like, no, we need to engage with this because we don't want to be left behind because there's more work to be done.
Yeah, interesting.
Yeah, look, I mean, it's, if we think about the Cosmos journey, from sort of 2 years ago, entering the space and trying to build an ETF business in this asset class to sort of where we are today, the amount of regulatory support that we're seeing in the market from where we got started, it's practically 180, right? So I think with global leaders like the US, from Biden administration, from Yellen showing support, to the local supporters, as in Senator Bragg, Jan Hume, just from last week's blockchain week, and sort of just hearing them, gives me confidence that we will continue to see sort of that leaders come out, and then we'll see our leaders get smarter around the technology and the advancements that it brings to the overall economy.
And you had the regulator ASIC even coming out last week at Blockchain Week saying we want to work with the industry on this potentially new asset class, which is unlike ASIC to really sort of make comment around something like this. So it's all quite promising in that respect.
Yeah, I mean, I think like I always like with any new technology, you're always going to have three camps. There's always going to be the sort of the guys that just go right away and just like trying to figure out what it is, and you're going to have some of the tail end that sort of straggles alongside, and then you're going to have a huge part of the population that just trying to understand what it is. And it's okay to have these three segments, but I think the advancements we've seen with our regulators over the last 2 years is phenomenal, and I hope this continues, because all that does is instill confidence in us, just really trying to deliver, from our perspective, Cosmos, deliver financial product to investors in the space.
It reminds me of the early 2000s, with the dot-com boom. The internet was relatively young, 6-7 years old at that stage. You had everyone leveraging, or piggybacking off the sort of development of the internet, e-commerce and all those sorts of things, and you had this boom bust, obviously, sort of a setback and all those sorts of things. I think there's lessons learned in the crypto space. So we're going through this right now in terms of the blockchain, crypto technology, and people forget, people think of this and they get nervous around this whole asset class, but it was only 20 years ago people were looking at the internet thinking about exactly the same thing. Absolutely. And now it's so mainstream, so commonplace. Yeah. Internet businesses are now worth more than traditional businesses, full stop, by a long way. So it's really interesting to sort of see the same thing playing out 20 years later. Yeah. Yet probably with a little bit more sort of gusto behind it.
Yeah. Evolution in the space is happening extremely quick. Independent reserve has been around since 2013, and so in crypto years that's kind of ancient. But the conversations that we're having are evolving almost by the month. Certainly when Independent Reserve was first reaching out to advisors, in 2016, 17, not surprisingly they all said just go away. We don't want to look at this space, we don't know enough about it, we can't do it. Fast forward to 2020, 2021, and even in the last year, the conversations that I've been having with a lot of the advisors is evolving really quickly. They're just saying, okay, it's here, it's real, I need to get up to speed with it. I need to understand it because I've got clients who want to know about it. So I'd back that up with just some research I know that we have done on an Independent Reserve. We have the crypto index that comes out every year, and we have hundreds of thousands of data points now. And the two trends that are sort of very clear from that is that one, adoption is rapid. Not surprisingly, the younger generation, so that 25, 35-year-old cohort, already it's over 50% of people already claim to have it. There's kind of a linear kind of chart down to the age of 65. Well, the 65 plus is still around 2 or 3%. Okay, so there's still a lot of adoption to go. But really, really interesting, I think, is the growth in that sort of 35 to sort of 50 bracket. I'll just lump them all together. That's growing fast, and one of the fastest growing subsegments is that because self-managed super funds, for example, has been a huge growth sector. And that's a more sophisticated, more mature investor than just 25-year-olds on their mobiles working.
And what are you seeing from? I guess there's pro crypto advisors and licensees, and there's not. Hence this session. Like there's how to get it on the APLs. Is it coming onto the APLs? For some, there are some advisors that are already advising on this asset class. Yes. What are you seeing? Like in the market at the moment, just to...
Absolutely. There are a lot of advisors and accountants as well who really want to get their head around the space and be that first port of call, saying we've taken the time to learn it. And so if you're interested in, that's one of our expertise in addition to, I guess, the regular things they're advising on. So yeah, we're actually now starting to see our first, I guess, cohort of crypto advisors, people who actually go out there and say, no, I know crypto, come and talk to me if you want to understand crypto. And they understand the infrastructure, they understand how the exchanges work, they understand more about how DeFi works, they understand the interaction with the tax and self-managed super funds in particular. And I suspect they're doing those businesses are going very well because they're growing they're a fast-growing business in a fast-growing segment.
Yeah, interesting in terms of the crypto specialist advisors who are sort of coming to the fore now in this space. Obviously, it's very much down in that privately owned IFA type market that are willing to probably understand risk a little bit, or take on the risk, I guess you could say, in terms of if there is risk, is probably in that segment we're seeing sort of more traction. And I know certain advisors and licensees are sort of thinking about, how do I get exposure to this asset class, but I'm still nervous around the licensing element of it. I think there's an opportunity to potentially partner with other licenses, and who wears the risk, I guess you could say.
Yeah. And that's one of the things that we looked at in trying to deliver sort of a dip your toe through the ETF platform, right? And us launching Digga, which were basically focused on the global miners, and these are listed businesses on global exchanges. That was the whole point, is that you now have a listed ETF that you can sort of look to as a dip your toe experience, right? And I know there's development happening in the background with some of the exchanges where, advisors will be able to look at holistically their clients' portfolios and see underlying crypto that they own, and be able to sort of get a holistic view on your overall exposure, and giving them, I would say, astute advice on what they do. But in the interim, there are financial products. When I say financial products, exchange traded funds that are available to them. Our recent partnership with Purpose Investments out of Canada, which was the first fund manager to list a Bitcoin ETF just over a year ago. All that does is opens up the platform for us to be swift in using their technology to deliver product to Australian investors. And that's our plan, is just to really look and try and give access.
Yeah, you mentioned a comment back before the webinar started about wealth inheritors and the fact that there's going to be $3 trillion in assets transferred over the next decade. In terms of going down into the millennial generation, they're the ones that are interested. They're the ones that are probably more educated in this asset class, willing to take the risk. So it's something that advisors can't put their head in the sand on. And licensees.
I'm happy to share a lot of the conversations that I'm having with advisors, because over the last sort of 12, 18 months, I've been having hundreds of conversations with advisors, and there is definitely a push. They say, hey, my clients are asking me about this. I don't know anything about it. So for them, they sort of will come to someone like Independent Reserve and go, I need to understand, how can I check that the people they're dealing with are legit? How can I check their security? How can I get my head around the process? So there's a lot that we do as an exchange just to make sure that we're helping educate and integrating in the advisor's world. So, it's Independent Reserve. We have a CPD course, for example, which is free for anyone to go check out our website and have a look at and get at least the basics about how crypto works. But also as well, the other piece that's sort of missing right now, but it's this question of going, you have to look to where it's going. We're building out some key integrations with some well-known existing financial planning software. I can't mention who just yet, so stay tuned. We'll definitely announce it when we can. That will allow advisors to view their crypto portfolios in exactly the same way they're now viewing their shares or their managed funds. And so this integration with the traditional finance world is coming, and it's going to make just advisors who get it. There's going to be no hurdles to allow them to access it there for their clients. So when their clients are asking about it, there won't be much excuse for them not being able to have a robust answer as to why they're.
Yeah, well, you've got financial planning software like Iris and BGL that are putting exchange information up there already at the moment. So in terms of actual clients trading now, obviously CBA we know has come out and they've now allowing their client base to actually trade in this asset class. I guess the overarching goes back to the speculative element. Up front was around the research and analytics side that you mentioned. The research side is definitely something that advisors need to be cognizant of if they want to start to understand this sector. And there's lots of tools out there now to get really up to speed on this sort of thing.
Yeah, look, there's a lot of noise out there, and that noise sort of makes it murky. and so it's important that investors just take the time to do their research, and there's a lot out there.
And before I close off, actually, and I think we're sort of stuck for time. There is another webinar, so we can cover off anything in the final webinar that we haven't actually addressed in this one. But I know there was a question raised around insurance. I know it's one of the biggest sort of bugbears, I think, of the licensing community around, like, yeah, this is all well and good, Angus. Great that we're talking about this new emerging asset class, but I can't do anything if I can't, get insurance on my business or professional indemnity insurance. I know, and it's still quite difficult to get insurance. I think we've got now Lloyd's dipping their toe in the UK around offering wallet type insurance. So I think this is only going to, the pressures that are coming from the industry in general is only going to increase insurance. I think in the very first webinar, we did make mention of the fact that how much exposure do you put your business under so you can cover any sort of fallout that may happen in this asset class. Not to say that it will, given all the conversations that we've had today, but I think that's something to be mindful of, that the insurers are now starting to wake up, and usually they're the last to be involved in this.
Yeah, and that's all. They're waking up because, again, there's regulatory support, right? Yeah. I mean, that's what it boils down to, right? So, I think with more regulatory support, not just locally but across the globe with leaders, I think we'll see, the pressures on insurance to sort of consolidate and make it a bit more palatable for advisors and businesses to attain insurance in the space.
Yeah, I think that's about it. Thank you again, Dan and Lee. I think we're developing a little bit of a chemistry here. So looking forward to webinar chapter 3 or episode 3. So we'll join you again in a few weeks' time. We'll get that date sorted. And again, thank you, Lee and Dan.
Thank you.
Fantastic. Thank you.